Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, everybody. Welcome back to another episode of Tech Talk. I am Cody. He is Andy. It is the 5th of August, just about 3 o'clock Central Time, 4 o'clock Eastern on this beautiful Tuesday afternoon. Andy, how are you doing?
It really is beautiful. I'll tell you what was cool, though. We had a Nerf gun party on Friday for my kid's birthday.
Oh, that's right.
20 Nerf guns and like 500 darts and like a barrel that you just like shoot. Like, it's crazy. It was craziness.
Sounds like a lot of fun.
I know. That's what I was saying. Like, I think you would enjoy it. Like, I could see you with like 2 Nerf guns just out there. Bam, 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 bam.
Sounds like a great time to be had.
Anyways.
All right. Well, let's jump into these charts. We got 3 charts. We've got 2 at request.
We do have 2 at request. And you know what? I'm just going to say it. I'm going to say this third one is also at request because it certainly has come up in conversation a lot.
That is true.
Over the last, call it like week and a half. And it seems to be like the one market, not one, but it seems to be the one market that people are asking the most about. And that is the CME block market.
Yeah.
What prices all this stuff on the class 3 basis, at least?
Yeah.
This is what we got on a weekly basis. Oh my gosh, Cody, get your hammer. What's going on? Do you have the hammer?
Gaps on gaps on gaps.
Do you have the hammer?
I do, yes.
Is it handy?
The block is a buy.
There you go. Boom. Yeah. I mean, this is phenomenal. When you look at like this W, right? Made a higher low technically.
Yep.
Had a nice, it's been making this W, gapped away from it. You have this gap that it's looking probably to go fill. What is this, 184-ish? And then it's a question of like, do we get back up to these former highs, which is like roughly like 190. We never actually had a close. What is this close right here? 194 and change. We've had a 195 print throughout the week. We've never actually seen a 195 close. So any close 195 or better. And futures, they're not there yet, but they certainly are inching their way up there. When I look at like the cheese equivalents, right? I think October is the highest, nearly at 192. So futures are certainly telling us that there's more strength to go, even from this price. And the chart certainly is suggesting that too. I don't know. Is there anything? You said gaps on gaps on gaps. Anything? What are you thinking here, boss?
Yeah. First thing that stuck out to me was that W. And then the gap that we had been talking about for, it seems like weeks on end there, you have circled at $1.80 to $1.82. I would agree. It looks like we're going to go test the old highs at $1.92, $1.94-ish area. And then it's going to be a question of, okay, what time frame is that? What are we going to do with the market once we're there?
And I'll say this. So we talk a lot about things like volume. I'm going to take this one away, and I'm just going to go like this. We talk a lot about like things like volume confirming price action or lack of volume failing to confirm price action, right? And so in this case, I think if you believe in that like applies to the spot market, then I think that is certainly true for the CME block market. Because if you look at over the last course of the month or the month of July, we had significant amounts of volume on a daily basis where, we kind of bounce within like a 3 or 4 cent range. But for the most part, like we were like the big story seemed like it was just like, so I was like, geez, every day we're trading, 10, 12, 15 loads. So my point with that is that when you get that type of volume and, high volume, whatever the product is, in this case, 10, 15 loads a day for the CME spot market is a lot. When you start to get that type of volume and then move away from that price, you're confirming that move. And so I think what we're seeing here is a lot of volume changing hands, confirming this new direction in price. And, the same would have certainly been true. Let's say we traded a boatload here. And then, like invert these candles. So now we're at like 150, whatever that number is. That would certainly like lend credence to the break. But in this case, it's the opposite. We've seen this big pop. It adds a ton of credibility to it.
My question is, do we get to $1.90 and just trade this range of $1.90 to $1.60 like we've done for the past 18 months, it seems like?
It's a good point. A good point. It's a good question, right? And I guess the first step is we need to go get to that price.
Right.
It feels like we're going to go test the upper end of the range, given the volume, given what futures are doing. It's the time of the year. What do we just posted like another record month of cheese exports today. How many record months have we had this year, by the way? We've had a few.
Is this like one in a row?
I feel like it is. I'm sure we can dig that out for you guys. But like at the end of the day, I know this isn't the first all-time record high that we've had this year. Right. Yeah, my point is that like this price point domestically on the spot market plus internationally, like it generates a lot of business. And so it's such a key area. And to your point, the question is, what do we do when we get back up in here? I think the futures will be a really excellent guide for that. Let's say you get to like 195 and futures kind of just start doing one of these numbers.
Right.
I think that'll be really great. But I mean, look at the way the futures have been acting here. They've been, September especially, it's just been leading the way. It's just really, really accelerated here over the last couple of days. So yeah, I mean, this looks like it wants to go test the upper end of this, and let's see what happens.
I'd agree.
Maybe we ring that $2 bell.
I would agree.
It's been elusive. It's
been
elusive.
It's
been elusive. You don't get to use that word a lot either. So if I could throw it in there, elusive. It's been there. All right, should we go to the next one? It's relevant to this here.
Let's check it out.
This came at request.
Let's check it out.
Octadies cheese as a pack. And so, a lot of times we look at individual months. In this case, this is, this is each an average of Oct, Nov, and Ds. It's just a simple average. And we like to use the average of the individual contracts rather than, so the CME has its own actual spread where, you put an order in and it would be like DCB 25:3M. And it's basically, you put an order in, you can actually put an order, you have to buy one, you're going to get all three, or sell one, you're going to sell all three. Yeah. In this case, this is just looking at the individual months. Correct. I think this is a little bit better because this encapsulates the day's trade for each month, whereas the pack would only look at if the pack traded itself. So sometimes you can have no volume in the pack, but have hundreds of contracts trade in the actual individual months. So the preference would be, this actually came as part of the request. The preference, in my opinion at least, would be to look at this individual months divided by 3. Or if you're looking at subsidies divided by 4. We can get into the whole math behind it. This looks good. I don't know. What do you think?
If you draw a downward trend, have we quite broken it? I don't think we have. From July.
You're talking about right here?
Yeah. There. I mean, we definitely haven't there. It still looks strong. I mean, shoot, it's at 4 or 5 days of continual upside movement. It's not bearish.
Yeah. So to your point, it made this double top right here, right here, and then here. And so you start the trend right there, right? So it has quite a bit more to go to the upside. No, not quite a bit. I mean, what is this? Double 1855. This is roughly 18, so another 20 cents, and you're bumping up against this trend. What stuck out to me when we pulled this up was this area right here, once again acting as support, $18.
Mm-hmm. Yep.
And I know this isn't quite $18 right here. It's pretty close. But for the most part, $18 seems to be a nice number where this thing really wants to start to go. I think the big test will be whether or not we can break, to your point, this downward trend. Because it is a downward trend for sure.
No.
If we think the block is a buy. Yeah, it's more like 1875 right here. So this line right here is 1875. Let me just draw that for you. Bam. So, yeah, I mean, if we believe that the block is a buy, which we do, and that the block has the potential to go trade 195, maybe even $2, dare I say it?
Dare I say? Dare.
Yeah, 1875. I mean, if it goes and touches this price and it starts to break through it, I mean, it could really accelerate. Then the next test, I think, would be right here, where the downward trend began.
Hey, okay.
And then I think you could make the argument, 19.5 is really where this was 2024, Q4 2024, when this was trading. I doubt there was a ton of volume there, not much open interest. I think this is the relevant price point. It's 1875, and then this call it 19 change. You get through both of those, and it could just be like a rocket ship. All right, so last one came a request internally. What do you think of soy oil?
Well, I thought getting short soy oil when we had what I thought was going to be an M formation on the second third of July was the right idea. Fell apart a little bit, and then just completely, kept rallying and making new highs. But this is the first time that we've actually seen quite a bit of pullback on this chart. I mean, look at there's a massive gap that I at that point had assumed was going to go get filled with the M formation. You made a lower high and then started a downward trend, and then all of a sudden, I don't know, something came out around 53 right there, but we had 3 days in a row where you bounced off of it and just kept rolling this thing higher. So I would imagine we're only $1 away from it right now. You go test 53 one more time, And if you can break through that, I think you probably get a pullback to the $50, $49 range, I would imagine.
So, okay.
Dollar? So
you
oil dollar?
definitely,
Is that what it is?
you definitely had a lot to. So you're saying, first of all, it's tough not to sell that.
Correct.
Right? I don't think you can beat yourself up too much on that one, right? Because I mean, the subsequent price action was just pretty nasty, right? And you got 3 days in a row where you're kind of being told like, hey, there's something else afoot right here. But you know, it is what it is. To your point, though, this is starting to break down a lot more than what like we saw on that move you just like right here. Right? You've got several days in a row. You've got a large trend has been broken today. Right? This uptrend has been going since what is this, early June?
Correct.
And then you've got kind of a much longer term one too. Is that if like what's super interesting about this is look at the convergence you could end up having, depending on how quickly it does it, right? Oh, but to your point, you got this big gap right here. What if you get convergence between filling this gap and breaking this long-term trend? That could be wild. I mean, you could really hammer this market if you got that, right? Because then you're starting to talk about like 46, and really you wouldn't have any, and then, you know, you'd want to use the points that you use to make the chart. 46 seems to be a pretty big area, right? It touches big, you know, long-term trend. Seems to be at the beginning of a shorter-term trend that just got broken today. This looks weak. This feels weak. This looks weak. And what sticks out to me too is, so let's just take a look at this. Tries to punch into new highs right here, right? Gets punched right in the nose, and then subsequently opens lower and gives it back 1, 2, 3, 4, 5, 6, 7 days worth of trade in one day.
Mm-hmm.
So the market's response to getting into new contract highs was to go give back 2 weeks worth of trade. Yeah, so I think there's a lot kind of like cooking here for this to be kind of weak. So I agree with you. Like this, I don't know.
So
to be
clear, right now, we're a seller of soy oil at this point.
That's correct. You know what? So during this Nerf party, I found the bearish bazooka.
Did you?
Yes, I found it. I was so excited. You know what? I should have brought it for the show.
You should have.
Next show, we're getting the bazooka out if there's a sale.
I love to hear it. Well,
that's it. That's all I got.
That's going to do it for this episode of Tech Talk. We appreciate everyone calling in, emailing in with their different suggestions. Glad we could run through them. If anyone else would like to see some, please let us know. We are actually going to be off next week. We're back the following week. And if anyone would like to see anything by then, please get a hold of us. But with that being said, everyone have a great rest of your week.
Wait a minute.
Go ahead.
Is that a new shirt?
It is.
I knew it.
Thought I wear it for Tech Talk.
All right. That's it.
Have a great weekend, everybody. We'll see you later.
Now I'm done.